Good evening and happy Friday. This is Shayna from the Trade Exchange, and it's been a busy week. We had a lot of big name companies reporting earnings from Apple, we had Amazon, we had Google. On top of that, the Dow today, it closed down over 665 points. And then today also marked the last day that Janet Yellen was the head of the Fed. So Jerome Powell is stepping in as the Fed chair. And is he going to set a more hawkish tone? Are there going to be 3 interest rate hikes this year? Will March bring about the first interest rate hike? Is inflation expectations going to be met now that we have received our job reports number and they beat expectations? So a lot of things happened this week. A lot happened today with the market being as down as much as it was. So very interesting. So let's get right into it and talk about some of the highlights of this week. Let's take a look at the 10-year yield. 10-year yield closed out at 2.841%. Now it even hit levels of 2.854% today. So these are levels we have not seen since January of 2014. We're talking about 4-year highs. I mean, let's look at this. We have the Dow, it closes down over 650 points. We have our 10-year yield at 4-year highs closing out above 2.8%. Now this is all being bolstered by this positive economic data that was released today. We had our job reports came out today. It comes in at 200,000. Expectations were only 180,000. We also saw wages increase, and the wages are actually expanding in January at the fastest annual pace since 2009. And this is just further evidence that as the unemployment rate goes down, it's putting more pressure on employers that they have to start increasing their wages to really gain the talent that they want and to maintain the talent that they have. And then we see our consumer confidence numbers. Those actually came back better than expected. We also heard from the Atlanta Fed this week, and they adjusted their GDP outlook higher to 5.4%. So all of this has helped push up the yield on the 10-year Treasury. We saw the yield rise 31 points in January, which is the largest monthly rise since November of 2016. So very interesting to see the 10-year yield closing out this week at 2.841%. Earnings, well, it's a big week for earnings this week. We heard some from very big names. We had Amazon, we had Apple, we had Google. Amazon, let's talk about them first. Well, they beat on earnings, they beat on revenue, but who would really expect differently? However, how much did they beat? Well, they were up on their fourth quarter sales 38% to $60.5 billion. Now, this is the largest profit on their sales in their history as a company, so really big news for Amazon. Apple, they beat on earnings, they beat on revenue. However, they put a warning for next quarter. And Google, well, they missed on their earnings, but they did beat on revenue. Now, next week, we're going to hear some from more big names. On Tuesday, we're going to hear from Disney. On Wednesday, we're going to hear from Tesla. And on Thursday, we're going to hear from Twitter. So next week's going to be another interesting week as earnings continues for this quarter. Let's take a look at crude oil. So crude oil, it's down this week. It's down 1.78%, but it's still closing out with a 65 handle. So the price in crude oil is still being bolstered by the production cuts from OPEC nations, from the non-OPEC nations such as Russia. However, the U.S. is still continuing to ramp up their production. We had the total rig count came in. It is down, the total rig count's down 1 to 946, but the oil rig count is up 6 to 765. We did see oil fall a bit today, as you can see here in this chart, and that's just simply it fell as the market took a hit today because, again, the U.S. jobs report numbers came back today and they were very positive, and this brings about concerns about interest rates, about the U.S. dollar firming up. Remember, crude oil, it's denominated in U.S. dollars, so if the U.S. dollar gets stronger, it makes oil much more expensive for countries that are denominated in other currencies. So with that, we saw oil come down a bit today, but again, the price is still being bolstered, closing out in the 65 handle. And let's take a look at our indices, because again, we talked about the market hitting big time lows today. So taking a look at the market for the week, the Dow is down 4.12% this week. It closed out 25,520. S&Ps were down 3.86% this week. They closed out 2762. The Nasdaq was down 3.53% this week, closing out 7240. And gold also closed down. Gold closed down 1.3%, closing out at 1335.20. Now take a look at the VIX because we've been hovering around the 10, 11 mark. Today we closed out above 17, so some volatility coming into the market, closing out this week at 17.31. Well, that sums up this week, and I thank you for joining us. It's going to be an exciting weekend for some because we have the Super Bowl on Sunday. So, is Tom Brady from the New England Patriots going to bring home his sixth Super Bowl ring? Or will the Philadelphia Eagles win their first Super Bowl? It's going to be an exciting game, and for that, we do have a promotion that we'd like to offer for our new subscribers. So, make sure to watch the video at the end of our weekly recap. Thank you again for joining us, and we wish you a wonderful, a very safe, and an enjoyable weekend. We'll see you on Monday. Good night.